Welcome back, everybody. Let's take a look at the cryptocurrencies this time. Sive is here with the forexpeacearmy.com. Well, on the background of the conflict with Iran and strong demand for United States assets and dollar, bonds, it seems that everybody are forgetting about cryptocurrencies. As the most risky assets, cryptocurrencies now stand under pressure. This is simple logic of the investor and portfolio manager that you need to sell the most risky and assets, those that are not bearing any interest and those who have highest volatility. As a result, you can see that minor slow but downward action exists here on the cryptocurrencies. As we mentioned previously, market stands very close to the big target, which is the OP on the daily chart. It's around 52, currently this target works like the magnet for the market. So usually in normal circumstances, especially when you see some acceleration down here, actually market has stopped here just because of the result. This pullback is out of the result area. And in most cases, markets try to complete major target before reversal or making any other performance. And from that standpoint, we were not ready yet to cancel this target and to exclude it from our observation. So we think that it's definitely worth of our attention, and it might be completed, especially if the Iran conflict or potential conflict will turn to the hot stage. As you know, any war is not predictable, and everything could be not as smooth as the United States is planning. And from that standpoint of view, everything might happen if this conflict indeed will start. Some analysis suggests that the chances on the conflict, despite the accumulation of the big forces on the Middle East and regular information from the Israel media that conflict is almost ready to start, many analyses suggest that the chances on the conflict is not as high as it presented in the media. So let's hope that this will not happen. But in this case, this will just accelerate the Bitcoin drop and push it lower to complete this target if the hot stage still will start. In the current moment, here's few that we could do. Actually, if you take the short position and you already have it, you probably could follow this potential butterfly pattern. We already mentioned it. Your stop in this case will be just above this area, where butterfly could fail. In the case of market will show the upper direction, and target will be, as we said, around 52.50. It's completion of this butterfly target. If you'd like to take the long position in current circumstances, it seems too much risk here. You need to get something clear bullish, but we do not have it yet. Yes, potentially you could suggest the upside butterfly as well, but you need to know what the particular background might be and where you place your stop in this case. Probably your stop has to be below the B point. But except of the shape of the butterfly, you do not have any other background. Actually, you do not see even that it is forming. Market stands just in downside channel to the nearest support, which is 65, or it may be completed in 63. We have the OP target of the inner ABCD pattern, and also may be completed. So currently we do not have clear bullish background, clear bullish signs. Besides, if you take a careful look on the daily chart, this type of the performance has some features of the dynamic pressure. It's just because market stands flat while the trend turns bullish, but we do not have any bullish action. It's cool. So obvious market is opposite. This market is moving down. So taking it all together, currently I suppose it's a bit risky for taking a long position, except you would like to make a bet on some big changes on a global arena or some big event, so some kind of the gambling when you would like to take the bet on some events that you can't control and can't forecast. So another option that theoretically might be considered in current circumstances, you could try to use, for example, stop buy order. Yes, it carries its own risk, but at least you will be safe in the case if market will just collapse. So for instance, you could use stop buy order around 71, 72 maybe, if suddenly market start upward direction, it might happen only if some big will happen, something will change drastically, and you will be filled in on the way to the upside in the moment of the breakout. If, for example, we will see drop, your stop order will be unfilled, and you will avoid this risk. That's the one opportunity that you could also consider. Maybe it will be handy in your trading plan. I do not know. But by my own view, currently market is not ready yet to consider taking long positions. Big points will be around 52, 52, 50, where theoretically might be interesting situation for long entry. But for now, I think that risks overcome the potential profit on position taking right now.